Hello everyone, welcome to another edition of Balanced Trading 101. I am Anup Jacob. I'll be looking into the various technical analysis charts using candlesticks across Indian stock market currently. So let's dive into it. So let me just take out the chart. So here I'm looking at Tata Motors, one of the interesting stocks in the Indian stock market, and I'm just looking at it for the last 6 months. And if you see the last 6 months, or maybe let's do that, let's just check how the stock performed before the last 6 months. That means the last quarters of the last year. And if you see, it has been going up, 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 up. But in the last 6 months, if you notice, let's just plot the support and resistance for the last 6 months. And not this one, let's remove that. Support and resistance, it would be somewhere here. And then if I take here, so if you see, it is moving up and then again go down, again up, again down, down. It is struggling within this channel. So this is called sideways channel. If you know, when some stock or any indices enters a sideways channel, it stays there for some time till it breaks out of it. Either breaks out by a heavy sell, which that means it goes down, or a heavy buy, which will allow it to break it. So this is what is happening here. According to certain indications, it is expected that it will cross 1200, or at least 1000 for sure, but it has definitely going to cross, it has crossed 1000 at some point. So this is Tata Motors. Now let's check another of Tata's enterprise, that is Trent. Trent is the retail chain of Tata. We'll just put Trent here. We get Trent. Yeah. So one thing interesting about Trent is it has been going up in the short term, but more interesting than that is we can understand various patterns and technical analysis. One of them is bullish engulfing. So I will show you what bullish engulfing looks like. So somewhere in August last year, when we put per day, you will find instance of bullish engulfing. You can find that in other stocks as well, but we will try to understand it from here. So there are many reasons why a stock goes up, and one of the pattern which gives you high probability of the stock going up is bullish engulfing. So this is one instance of bullish engulfing, where the green candle is dominating the previous candle, which is basically red. It is dominating the red candle, the previous red candle. So that means there is a likelihood, very high likelihood of the stock going up. So that is what's happening here. So we'll find, is there any other, see again, this another bullish engulfing. It is dominating the red and again goes up. So this is the example of bullish engulfing. It is important that you are able to find out all these patterns. These patterns do not give 100% definitive answer, but it definitely gives you an idea where the trend would likely be. So this is a bullish engulfing. Now we will see HDFC Bank. Now HDFC Bank is one of the major private banks in the Indian space. So this has largely been in a sideways channel for fairly long time. Though it is a good bank, it does have it is not giving the required performance in terms of stock, but the idea about showing this HDFC Bank is, let's see various indicators. Now indicators give you a sense of how the performance of the stock. So we have RSI. RSI means relative strength index. So if I take this, you will see at the bottom there is this graph. It moves between 0 to 100, but basically 30 to 70 is the range which we are looking for. So when it is at the lower level, that is nearer the 30, it means it is it's oversold, that is, people are just selling it, but as it goes up means it's been overbought. So overbought means that it has become expensive. So it is likely that you should not buy at that time, because the stock is at a high value. A lot of people are buying it, therefore it is of high value, or high cost. So it is likely that it will come down. So that is an indicator which will help you decide whether to buy a stock or not. Now there's another indicator. Let's close this indicator because there's too many indicators, but it is important to figure out which are the important indicator and where to apply. Now there is a thing called EMA, that is a moving average exponential. So moving average, and you find the exponential, you're basically smoothing the curves. So it gives you an idea how it is moving. So all these things are based on historical data. So this is another EMA, but there you can use this to figure out when to buy, when not to buy. There is a way of doing that. That is something which I will explain to you maybe in a later video. But these are these are few of the indicators which could help you make independent decision, not only in stocks but also other instruments, or such as crypto, or you can also do it for forex and commodities, even gold. uh, Gold has been one of the commodities. So this is what I have for now. Do check out my channel at balance trading 101 on YouTube. Also we have a website called balanced trading 101.com. Please visit and learn more. Thank you.